Let's take a look at the concerns around the weakening global economy. We had Morgan Stanley coming out and cutting its forecast for global growth to 3.9%. That's from a previous forecast of 4.2%. How do you see this all playing into how the markets in Nigeria are likely to be affected by the global economy at this stage?
All right, thank you very much, Samantha. Yes, you are right that the global economy seems to be weakening. This is arising from the sovereign debt crisis we are seeing in some European countries, and especially United States of America, which is the biggest global economy. But then the transmission to the Nigerian economy will be mainly through the international crude oil market, which also, for which demand will be affected by happening in the global economy. But we don't see much of that reduction for now, because what you have seen is a situation where the increases expected in demand for crude oil globally will probably be moderated, and therefore we expect that the price will remain fairly high, so that it will be able to sustain growth in Nigerian economy for now. But what is important for us is to get our ideas together in terms of implementing policies that will drive growth in the economy, so that we can have a solid foundation for growth going forward, irrespective of what happens in the global economy, and especially the impact in crude oil. We need to diversify our economy to reduce dependence on oil, especially in terms of our export.
That has been cited by many as a key for growth in Nigeria. Now, one positive, though, in terms of encouraging portfolio inflows, is that inflation has come in at single digits for the past month at 9.4% from 10.2%. Many are saying that as we move towards positive real interest rates in Nigeria, this is likely to encourage more investment inflows. Is this what your view is as well?
Yes, you are right. You are right there. If we can contain inflation, it will definitely be a good thing for the Nigerian economy, and therefore reduce the risk of investment and projection into what will happen going forward. But then the point is, we need to look at what is driving inflation and what has been responsible for the reduction in the inflation rate in the recent months. One is the fact that the price of diesel remain high, and that tends to put an upward pressure on inflation. And also government expenditure is high, given the revenue and allocation from Federation account in recent times. But then the Central Bank of Nigeria has been very proactive in containing inflation by moving up its monetary policy rate like 4 times this year, very, very proactive, from 6.25 at the beginning of the year to 8.75 currently, which happened in July. And so we discovered that the ability of Central Bank containing liquidity and therefore moderating inflation has been very, very effective. And we expect that, looking at the play of things within the rest of the year, they may be able to hold inflation at about 10% or slightly below 10% for this year.
We are running out of time. Just before we go, I'd just like you to touch on the banking sector results that we've seen coming through in light of Access Bank releasing its first half numbers yesterday. A 6.1% rise in gross earnings there, a 6% rise in pre-tax profit, and just over 20% rise in post-tax profit. What are your thoughts on banking sector numbers we've seen so far?
Well, from what we can see, the banking reform embarked on by the Central Bank of Nigeria, the mopping up of toxic assets by Asset Management Company of Nigeria, and other steps that have been taken have been very, very effective in improving the performance of banks. And going forward, the threat of non-performing loans and its effect on performance has been greatly reduced. And so the banking industry is becoming stabilized, and therefore we expect growth. The growth we have experienced in the first half of this year for the banking industry, or for banks generally, to continue to improve as we move forward. And you discover that has also will have a positive impact on the Nigerian capital market going forward, because banking industry consumes about 30% of the market by value, and therefore whatever happens to the banking industry have a great impact on the capital market as a whole. And as we have seen, the results are coming out good. All banks have shown improved performance, and we expect this to continue. Although there is fatigue by investors, but we expect that by the time the third quarter, full year for this year results are released, and we see consistency in improvement, it will impact greatly on the industry and the economy as a whole.